So Kevin O'Leary did an interview where he said that if you invest $100 each week, you can retire a millionaire. Now, I do agree with that, but there's a big but. There's some big buts to that. So I'm gonna go over the interview on my phone and then I'm gonna jump on my MacBook and pretty much put his numbers into a financial calculator, and I'm gonna show you what actually will happen based on his numbers, and also some of the things that you need to pay attention to, such as inflation. So let's get started with the article. So the article reads, Kevin O'Leary says investing $100 a week will make you a millionaire by retirement. The FIRE movement is a motivational platform to get people thinking about their future financial stability. So FIRE stands for Financial Independence, Retire Early. And people in the FIRE movement, they want to save as much as possible so they can retire in their early 30s or 40s. They like to live the minimalist lifestyle, so they don't spend their money on expenses that they pretty much don't need. Everyone approaches retirement. So I'm gonna read the first part of the article and then get into the numbers, because I wanna take his numbers and plug them into a financial calculator. Everyone approaches retirement differently, but there's only one way they should really prepare for it: by investing, which is what I agree with, because that's also why I jumped into investing, because I don't want to work my whole life, and investing is not only a good way when it comes to retirement, it's also a safe way and stable. Some people plan for retirement over the course of their careers, while others wait to think about the next stage of their lives when it gets closer. Not all Americans save adequately for their old age. And of course, this is not only limited to the US. Partially because they can't afford to do so, or because they have other, more present-day financial obligations, such as student loans, childcare, and high costs of living to worry about. So interesting thing about that is, when I first came to the US and I worked at my first job, they had a meeting that discussed the 401k, which is a retirement plan that you can enroll in when you work at a company, if the company that you work in offers it, of course. So I was one of the only young people at that 401k meeting. Everybody else was in their 50s or 60s. So most of them were like, man, I'm too old to start investing. I'm not gonna invest in a 401k. Go figure. Still, there's a portion of the population, albeit small, that pursues retirement early, in some cases by the time they're in their 30s or 40s. They do so by living frugally and dedicating most of their income to the stock market. This movement is known as FIRE, which short for Financial Independence, Retire Early. Okay, let's scroll down and jump into the meat and potatoes. Here we go. A lot of people in their 20s and 30s might not want to retire too early, but they have a savings number in mind that would give them financial independence. How important is it to achieve financial independence, and what does that mean for you? So the interesting thing about that is that I look at it a little bit differently. Most people will have a number in mind. Let's say a million. I want to have a million invested in the stock market. If I have a million, I can retire and just live off that investment for, let's say, if I take out 4% each year, that's 40,000 out of that million, and live off 40,000 every single year till my investment dries up. So every single year you're selling a piece of your investment, which is something that I don't agree with. Because as a dividend investor, what I do is I build up my investment and I live off my dividend, which means that I potentially never have to sell my investments because I just live off those dividends. You have to start thinking about what you can get from investing. Of course, the market provides on average 6 to 8% on an annual basis over a long period of time. So what he's talking about is that if you invest in an index fund or a mutual fund or an ETF, on average you can expect capital gains of 6 to 8% over a long period when you look at the annual numbers, annual basis. Remember that 6 to 8% because that's what we're going to use to plug in into a financial calculator. Okay, can I live off of 6% of my portfolio? And after it pays 2% in taxes, a distribution of 4%. you're going to find you really want to get 750 to 1.5 mil invested, so that you can live off that. Let's make it easier and let's just go middle of the road, 1 million. So he's saying that if you take 6% of that 1 mil, that's 60K. 2% is gonna go to taxes, which is 20K, and then the other 4%, which is 40K, that's what you're gonna use for living expenses. I'm not saying that those are my numbers, those are his numbers. The average salary in America is 58K, and if you work backwards, you can save $100 a week. You can put that money in the market and buy an index or exchange traded fund like the S&P 500. How do you think we as a society can do better to help Americans achieve greater financial literacy? So O'Leary says number 1 is education. Number 2 is making investing really easy, and that is one of my mandates for myself in 2021, 2022. So number 1, education. Definitely watch my channel. I talk about investing and more, but not only watch my channel, also look at other YouTubers that talk about investing, because you never want to just watch one YouTuber and get your opinion from them or your view. Look at a couple of them and see what works best for you. And number 2, making investing really easy. Honestly, investing has never been as easy as how it is now. Especially like you can invest from your mobile phone. And back in the day, you still had to pay commission fees in order to invest. But definitely let's plug in his numbers and look at the financial calculator. And I'll give you some things to pay attention to, such as inflation also. So let's do it right now. So the financial calculator that we will be using is on a website called Dinkytown, and the actual calculator is the Cool Million. And you can just Google this. So we're gonna plug in some numbers. We're gonna plug in the numbers that O'Leary was giving us. So let's say you want to retire by, I'm gonna just leave the age at 26 right now and the millionaire target age at 65. So currently we have 0 invested. And how much are we gonna put in per month? So he said 100 per week. So 100 times 52 weeks is 5200. So let's do 5200 divided by 12. So we're gonna invest 434 a month, which is 100 a week. So 434. So expected rate of return when it comes to the stock market when you're investing for capital gains, he said 6 to 8%. So I'm gonna leave it at 8%. And then we also have expected inflation. Now this is something that he did not mention. Let's leave it at 2.9%. So let's look at this. So if you start currently investing at 26 and you invest 100 a week, you will be a millionaire at age 62. Now 62, and that does not account for inflation. So if you look at this graph down here, you can see your balance at age 62. Yes, you will be a millionaire at age 62, but with expected inflation, your balance will actually be 363,000. So that's a lot lower than your million, but let's just stick with the million. Let's not look at inflation. Let's do 0 inflation, and let's change this to 62. And let's say you started investing in at 30. So you'll be a millionaire by 66, which is still good. But here's the problem. Let's say you just came out of college. Let's say you're 22. You started investing, and according to O'Leary, if you invest $100 a week, you would still, based on the expected 8% rate of return, you'll hit that by 58, which is still way too long if you think about the FIRE movement, because the FIRE movement, they plan to retire in their 30s or 40s. So if you want to retire by, let's say, your 40s, let's see how much you would actually have to invest per month. Let's just do a good number of 1,000. So we need to do more than 1,000. Let's do 2,000. So So we need to do even, we're close, let's do 2,500. So about 2,500 a month. Let's do 2,300. So you need to be able to invest about 2,300 a month if you want to retire close to your 40s with an annual expected rate of return of 8%, of course. Now, if you wanted to retire at the age of 30, let's do this. Let's do 4,000. Let's do 5,000. So you can see you need to invest a lot more if you want to retire at 30. So if you're 20 and you want to retire 10 years later, you need to be investing about 5,500 a month if the expected rate of return is 8%. Now, if you want to do 50, let's do one more. 35, you want to retire, you're 20 and you want to retire at 35. Probably 4, there we go. 3 and 3,000. So if you're in your 20s, if you're 20 exactly, and you want to retire 15 years later, you need to be investing at least 3,000 a month with an expected rate of return of 8%. Now keep in mind, I kept inflation at 0, and inflation is about 3 to 4% each year. So you would also have to put in inflation if you still want your money to have any buying power. So yes, can you retire by saving $100 a year? Not a year, a week? Yes, you can, of course, but it's gonna take you a lot longer than what the article actually is mentioning. Funny thing is, the article, as far as I can tell, did not even mention how old you need to start investing and at what age you can retire. The article just said if you invest 100 a week, you can retire with $1 million. But like I said, if you look at this, let's say you're in your 30s and you invest that 100 a week, it's gonna get you all the way up to age 66 if you want to have build up $1 million in your investing account in order to retire.